Hey everyone, in this video we're going to be looking at my plan if it hits the fan, meaning if we see significant market weakness, how am I going to react to that? And we're going to be looking at 3 different scenarios, each with increasing magnitude of weakness and fear. And it's important to note that no 2 individuals have the same financial situation, so no 2 individuals' plan for something like this should be the same. So while you may be watching this video and get some insight as to how to make your own plan or take little pieces that may fit into your lifestyle, it is important to note that you're going to have differences. So for one personally, I have the vast majority of my assets are liquid cash as I'm a day trader, and that allows me a lot more maneuverability than if I had a long-term portfolio. My age, being 31, is a lot different than if I were 61. I don't have a family, I don't have debt. These are all things that would change how I would establish my game plan personally, but with where I stand, I will give a little bit of insight as to how I'm planning, because it's important to be establishing these plans when we're 1 or 2% away from all-time highs in the market. The last thing you want to be doing is establishing these plans when fear is really high and when we're seeing those emotional reactions. It's important to note that I personally have a distrust of the government and of financial institutions. It's just the way that I have been brought up and molded by society. But I also realize that historically speaking, my opinion has no basis. There is no, the market always goes up. In the history of forever, in the US market, it goes up. And that's the way that my parents and baby boomers have been dealing with the market, just putting money in it and trusting that it will always go back up. And pretty much sitting through 2008 and watching that recovery has to be pretty much all the validation that you need to have that kind of belief. I don't have that, but I can look back historically and recognize that I should probably establish some long-term portfolio positions in significant fear scenarios because of what has happened historically. So now let's get into breaking down these 3 different magnitude of weakness scenarios, how we'll establish our game plans, how I'm establishing my game plan for them, and how we can look at historical previous examples as to what happened in similar situations. The first kind of scenario that we're going to look at is a scenario similar to December 2018. We had a weekly downtrend in the S&P 500. Anything that's not in a weekly downtrend doesn't even make the cut to be in this video. So August 2019, we just had a sharp pullback a month ago, but we didn't lose the weekly uptrend. So that's not nearly enough fear to be included in this video. And you have to keep in mind that for me personally, my strategy is completely ignoring, and this may sound crazy, but completely ignoring the fundamental data and the fundamental fear that people keep talking about. You know, if you have Warren Buffett and Bill Gates and Donald Trump all call a joint press conference and say the market's about to tank. Until I see it in the price action, I don't care what any headline says. I have to see it in the price action in the chart. The only thing that makes me money in this market is when the price does certain things that I want it to. And if the price isn't doing those certain things, then there's no way for me to make money. So I always will resort to the price levels. Just like I said in August, we didn't lose the weekly uptrend. And that was a way that I kept a level head and didn't succumb to all the bearish articles, because we're still in the weekly uptrend at this point. That can obviously change. That's why we're putting this video out now in case that does change. But scenario number 1, weekly downtrend, high fear, significant pullback, but a significant buying opportunity. And as we saw, which we will look at as the historical example, it ended up being a fairly V-shaped recovery. So if you were watching the Chart Guys videos back in December 2018, you remember that I was scaling in. I had my burning dog, saving the dog from the burning house analogy, and I was looking to scale in with a leveraged ETF because I was in a short-term mindset. I was looking to play the oversold bounce and be done with it. Whereas now that I've witnessed that play out, I'm going to have a longer-term perspective, and that for me means going with non-leveraged ETFs and instruments, because the leveraged ones, or the leveraged ones, will have the time decay factor. Pretty much if I'm looking at a trade that's 2 weeks or less, I'll trade those leveraged ETFs. And if I'm looking longer than 2 weeks out, I want something that is not subject to time decay. So it's a scenario with high fear and it's a buying opportunity. I personally right now have an IRA that I have been contributing to that is all cash right now. I have made trades with it in the December 2018 scenario. That was an account that I took trades in, but it's all cash waiting for high fear. That's pretty much, it's not a retirement account for me. It's a act on high fear account, and I will be deploying that capital to use when we see that high fear. Now, obviously, there's a lot of ways to make money on the way down in any of these three scenarios that we're going to look at, whether it's buying puts, whether it is playing short, whether it's playing inverse ETFs. Those are all ways to make money, and those are all great ways to hedge against a long-term portfolio. And I've talked about that recently where the S&P 500 formed that double top. That's a great area to look to hedge a long-term portfolio with a stop loss in case we do see clear new all-time highs, but protecting in case we see some downside. But for this whole video, we're going to have more of a mindset of how to respond to all this fear, not necessarily how to make money during the fear, because again, there are definitely plenty of ways to do that, but how to respond with our current cash assets or whatever assets we have, and how to position ourselves to benefit from any potential recoveries, if there are potential recoveries. And again, historically, there is always, and there has always been a recovery. So I'm going to look to diversify, whether it's through SPY, which does have dividends. SMH has my attention now. SMH has been on fire the past couple of years, and it's really one of the new kids on the block as far as a sector that's getting major attention is the semiconductors, and it's being responsive. It's the most responsive to the China trade war news. Whenever there's bearish news, they pull back harder than everybody else. Whenever there's bullish news, they go up harder than everybody else. But it's still a bullish chart right now, and I'm going to be looking at any significant fear in the market as a potential long-term entry into this sector. Of course, we have metals and other safe haven assets, such as the utility sector, to be keeping an eye on, because the utility sector can still go up when there's fear. And of course, the metals can go up when there's fear as a bit of a hedge against the overall market. So we'll look at gold and silver and the bull miners that have some potential opportunity there. REITs and dividends. I'm going to be looking to get into some longer term positions that have guaranteed paychecks, essentially. If something's going to guarantee to pay me X amount of dollars every quarter or semi-annually, however often it is, I want to have some long-term money in that scenario. So again, if you already have a long-term portfolio and you don't have a lot of cash, you're not going to have anywhere near the same game plan as me, because my long-term portfolio is literally all cash in this moment. So I already went over leveraged and non-leveraged ETFs. So let's now take a look at the charts as a historical example, but keeping in mind that, of course, no two scenarios will be the same. So now looking back at the historical examples, this is SPY going from the all-time high and dumping September, October, November, December, and pulling back 20% in about 4 months. So a very significant pullback. And again, I want to stress protecting positions. Even if we're dollar cost averaging in, this initial pullback, we started bouncing higher low, lower high, bear break. We have to protect against the next leg down, because when you're in the heat of a fear moment like this, we have to be expecting we could always see another leg down. We could see what we think is a December 2018 scenario slowly snowball into a 2008 scenario. We have to protect against that. So what I'm going to be doing is scaling into positions, and then as soon as I can place a stop loss, ideally at break even or a small loss that I'm comfortable with, that's what I'm going to be doing, because again, I'm not going to expect to just nail the bottom and everything's going to be a-okay from there. So SPY pulled back. We then saw a V-shaped recovery right back to the all-time high. 20% pullback, 25% bounce. So obviously any long-term entries in SPY would have done very well, and we of course continued to all-time highs from there, currently in an equilibrium. So we're watching now to see how this equilibrium is going to break, because if we stay in a weekly uptrend, the market stays a-okay. If we break the weekly uptrend, then we start needing to consider something potentially similar to December taking place. So I'm going to be looking at gold. And what I was just talking about, where not every scenario is the same, obviously, gold was in a multiple year monthly equilibrium when SPY was seeing that fear. And gold only went up 10%, and it was contained by previous price resistance levels inside this equilibrium. Gold has since broken bullish and seen way more gains in a very bullish market with the equity market. And it's because it has broken this equilibrium range that it's almost free to trade. It's like a weight has been lifted off its back, and it can go a lot further. So if you were to throw this current chart for gold back in time to December 2018, in my opinion, the gains would be way more than 10%, because there is much more freedom for price movement without previous price history acting as resistance. So I would be much more inclined to play gold and bull miners now if we saw fear in the market than I would have been back then. And looking at the bull miners, again, back then, From the low to the high, we saw about 100% move. And here we are seeing multiple hundreds of percent while the market is still very strong. So again, completely different scenario where gold is currently trading in its longer term chart than where it was back during that fear spike in December 2018. Here's SMH that I was talking about. So the semiconductor sector, 50% bounce from the bottom in December to the top of the move. So twice as much as SPY. And again, we can't anticipate that we're going to nail the best performing sector, which is why diversification is key. I want a little bit of SPY. I want a little bit of SMH. Maybe I want some of the tech sector. Diversification to spread out the odds of you nailing one of the best bounces out there. Dividend stocks. So here's a list of some of the better or the biggest dividend stocks that are out there. So again, these want to be on your list and you can choose them based on sector. If you want a tech sector dividend stock, if you want an energy sector, you will be able to determine which you want to take a look at. But again, if I'm looking long term and if I think this is a buying opportunity where I'm looking to hold for 5 or 10 years, I definitely want some dividends to result from that. Can't fall asleep on the cryptocurrency space. Even if you've never traded Bitcoin in your life, you definitely want to have a game plan for having capital allocated to cryptocurrency. Back in December 2018, the fear and the weakness in the cryptocurrency space was at its peak. We were at the bottom, and we did not see Bitcoin react in any way to market weakness. That being said, there are scenarios of market weakness or dollar weakness where I do feel that cryptocurrency and Bitcoin in particular will go up. So I personally have cash that I have allocated only for cryptocurrency, just sitting and waiting. I am in some long-term no-touch crypto positions, but the cash that I have allocated for the cryptocurrency space in any kind of fear event is much more significant than that, and I will be putting that to work. So again, the last thing you want to be doing is seeing Bitcoin breaking out to all-time highs in a high fear market environment and then just trying to figure out cryptocurrency for the first time. How do I get money in there? You want to have that game plan all established. Doesn't mean you have to buy Bitcoin now, but you want to have a path that is already the steps laid out where you can very easily and in a timely manner allocate capital to the cryptocurrency space if it does start acting as a safe haven asset, as many people feel that it will. I personally feel that under certain scenarios, Bitcoin will absolutely act as a safe haven, which is why I have that capital just ready and waiting to go in case I ever need to escape the US dollar. Because like I said, a lot of my capital is in cash. And if the US dollar starts to see significant weakness and if there's fear with currencies and all that, I definitely want to be able to escape to other avenues that may offer me more protection. The next progression of fear in the markets to look to is an example like 2008. I personally was not trading during 2008. I started in 2010, but it was a big motivator for me when I had my high school saved up money in a mutual fund and that went down 40%. And I said, well, I might as well lose money actively trading than passively sitting here and watching it all go down. But something that I have done about a year or two ago is I devoted time, and I absolutely suggest every single person watching this video do the same. Go back and devote 3-5 hours to watch every single chart during this time period. A lot of people think this is a once every 70-year event. That remains to be seen. But again, we must be prepared in case we see something else like this. So go back and look at what gold, the S&P 500, the utility sector, the miners. Go look at what everything was doing during this point in time and learn from it. Of course, if you haven't seen movies like The Big Short or documentaries like The Inside Job, we have to learn from history to be able to profit if it ever happens again. It was an extreme fear, obviously. The entire global economy was put on hold. And capital, one thing, the takeaway that I had from looking back and seeing how everything played out, capital didn't really feel safe anywhere in any market, and the safe havens weren't really acting as a safe haven at all. So obviously, if this were to happen, there's a ton of bearish opportunity. We know from movies like The Big Short that a lot of people made a lot of money on the way down, and a lot of people also made a lot of money on the way up buying that dip, whether it was real estate or the stock market or the banking stocks. There was tons of money to be made in both directions. Ideally, in any of these scenarios, We're just going to be looking at what to do with our profits, making profit on the way down, and then allocating that capital into bullish positions, knowing that eventually things will go up again. And that is going to be my game plan personally. So I will look to have, again, I personally view being in cash when the market dumps as a bit of an advantage. If I'm trying to beat the S&P 500 and my account value doesn't drop at all and the S&P 500 drops 10%, I just gain 10% on the performance of the S&P 500. That being said, I have to be very careful what the dollar is doing, because if I'm sitting in all cash and the US dollar starts to dump, that's when things can get hairy, and that's when I have to have alternative game plans aside just being in cash. So you better believe that I will be looking to play bearish positions, most notably shorter term. Swing positions can be fine for bears as well, but I will be looking shorter term on the way down and longer term, meaning decade or two out into the future, when looking to allocate capital when things get really extreme. And I think it's a good time to start dollar cost averaging in those long-term positions. So again, looking back historically, we had the huge pullback. This is the weekly time frame on SPY. We can see we were in a very clear weekly downtrend before things really fell out. And it fell out here in September 2008. And the total pullback that we saw was about 55 to 58% on the S&P 500. Obviously a very significant recovery. Tons of opportunity to the downside, tons of fear, and then tons of opportunity to the upside. So that was a significant pullback. How did other assets perform during the same period? The dollar was seeing weakness pretty much 2001 into 2008, and we bottomed in the dollar before we got really ugly in the markets. So if I'm putting myself back in time, and with my current assets and where my accounts are and things like that, I would very easily be able to sit cash. If I wasn't playing bearish, I would be able to sit cash through this really ugly downside and remain comfortable, because the dollar had bottomed out. The dollar's bottom was in March of 2008. And if we look back at the S&P 500, here's where we were in March. It was well before things got really ugly. So that's worth noting. But if we're putting ourselves in a different scenario, let's say the market is dropping hard and the dollar is dropping hard with it. And if the dollar's dropping 20% in a year, I'm going to want to be putting my assets somewhere that is going to either hold more than 20% or be able to appreciate. And again, that's where cryptocurrency is going to come into play for me. We don't have a historical example for Bitcoin from 2008 because it was pretty much the 2008 crisis that birthed Bitcoin into being. But you better believe that if we're in all-time highs on Bitcoin and there is cash and assets are liquidating and cash is pumping into Bitcoin, and if we're hitting all-time highs, again, the narrative is going to be played over so many times on CNBC and social media where, you know, Bitcoin is the safe haven asset. This is what Bitcoin was created for, and I want to be a part of that. So again, I can have a complete, this isn't true for me, but if you're sitting there saying Bitcoin's a scam, I don't trust it, I have personally traded things that I have known have been scams back in my penny stock days, and I made money off of them. So don't let your emotional attachment or detachment from something dictate your ability to profit on it. You can think Bitcoin's a scam, but if the dollar and the markets are dumping and Bitcoin's at all-time highs, absolutely get in there, treat it short term if you want to, but get your profit, get your money. Because again, there's opportunity all over the place, and the last thing we want to do is have emotional biases limit our ability to make money in these markets. Financial sector obviously hit the hardest. We dropped 85% from 2007 to the bottom at the start of 2009 in the financial sector. Of course, we've roared back multiple hundreds of percent since then. There was huge opportunity to buy the financial sector. And again, the people that were buying and making big money on both real estate and on the financial sector, they were stepping in front of a screaming bear train. You better believe that they had a stomach of steel to be able to put that kind of risk on their plate, but obviously it paid off. High risk, high reward. So gold, as another example, if we look back to 2008 when things were getting ugly, gold did go up about 60%, absolutely. But if you look at it, again, the same comparison, it was range bound. It was unable to break resistance, and it stayed contained while the market was going through its weakest. This is the market going through its weakest. And then the S&P 500 started recovering, and then gold went nuts. So gold, once it was able to break its resistance, went another 90% long after the bottom was hit on the S&P 500. So I went back and looked at this and said, yes, people were definitely treating gold as a safe haven and putting capital there when the markets were very weak, but it was almost as if everybody was really scared of every asset, and then they went into gold when it was a sigh of relief and said, okay, the world's not collapsing, I want to get some gold. So these are definitely things that I'm going to be focusing on personally. And again, it's a game plan. Am I going to scale in on my SPY position? Am I going to scale in maybe 20% every 5% that we drop? The S&P 500 in 2008 dropped 55%. So that would be scaling in too fast. Maybe I enter 20% every 10% that we drop. But again, if you write out your game plan and you have it, so you can open up your notebooks and say, okay, well, this was my game plan when I had a level head and when I wasn't listening to fear articles and when my bias wasn't being impacted by all the talking heads and what everybody's talking about, I should probably stick to that game plan and follow those steps. So that is the goal of this video. And now we'll head on to scenario 3, which is complete and total collapse. So I've never been much of a doomsday prepper, but as I was searching for a property, I definitely had all this stuff in mind as far as multiple freshwater creeks running through the property, and they feed into the ponds, and then the ponds feed back into the creek. But being able to have some source of fresh water for drinking, obviously, with a filter. We've got multiple filters here, some portable and some more stationary, and also just for watering purposes, if there's ever a drought and the crops need water, can easily get it from nearby water sources. So another thing that is great about this area for living is that it is a temperate rainforest, so there's plenty of rainfall. It's got a great growing season. As you can see behind me, it's mid-October right now and crops are still popping off. I got a few seed vaults, survival seed vaults. These are 50, 60 bucks on Amazon, and it's just, 105 different varieties of seeds, and that's just a buffer as well if I haven't been saving my seeds, which I usually don't do a whole bunch of seed saving in my growing, but I'll have all these seeds ready to go, and I'll certainly know to start saving my seeds if it ever hits the fan. Here's Exhibit A as far as how easy it is to grow things here. This is just horse manure that I spread out, and there are dozens of squash sprouting from this horse manure without me ever doing a thing to them. So some other preparations that I've taken. This is the Yeti Lithium 1400 version. Just a big old battery that you can charge in the wall in case the power goes out. But if things get ugly, I've got a big old solar power panel here that will charge this, and that can be used for things like electric tools. And certainly want to have all the tools that I need to be able to farm and stuff. But I'm also got a really cool electric bike on its way. One of the TheChartGuys members is in the business in town here of building electric bikes, so I had him make me one of those. And I'll be able to plug it into this as it's solar charging and use that for fishing in the river nearby. And the other good thing about the electric bike is it's really quiet. So obviously want to stay under the radar for a number of reasons, but some nice compact fishing gear with all the supplies there. So of course you got your canned food, and obviously this isn't going to be a big enough supply to last me years or anything like that. Just looking for a little bit of a buffer. And that will then mean that we are reliant on food that we grow here and food that we can scavenge from the area. I'll definitely get a little bit more as far as this supply goes. I'll probably double up here, but again, not looking to live off of canned food, just looking to be able to establish ourselves to be able to be sufficient with the garden. Another thing that I did is I took out a chunk of cash and I have it at a secure third party in case there's ever a run on the banks. If everybody goes to try and get their money out of the banks at once and the banks run out of liquid cash, I will be able to still access that capital if dollars are still valuable. I've got some physical gold in case that needs any value. But other than that, I'm very well aware that my technical analysis skills and skills that I've been honing for a decade are completely useless in many scenarios in life. And so while I definitely enjoy farming and gardening, and it's one of my passions, it's also been a hedge because I am well aware that my skill outside of the computer world has no usability. So I have been hedging that with a skill of knowing how to grow my own food, essentially. So another thing that I myself certainly start to take for granted is access to the internet. So if we don't have that, I can't look up, when do we harvest potatoes again for a reminder. So there's all kinds of books that I want to have on hand. The new Self-Sufficient Gardener, Prepper's Water Survival, Prepper's Long-Term Survival Guide, just information where if the grid goes down, I have access to that if I need it. Here's an example of one of my portable water filters. It's just a life straw and a bag. I like the bag units that you just scoop up the water, hang it from a tree, and you gotta wait about 20 minutes and it drains and it's good to go. And this has a life of thousands of gallons. Don't know exactly how much, but certainly long term. And easy, like I said, if I'm riding my bike around or if I have to go somewhere nearby, that's very easy to pack up and go with it. Also got a bug out bag, which just has about 72 hours of rations and emergency things where if I have to leave here, that is a little bit of buffer of support. And of course, need some protection both for defense or as well for hunting purposes. So got a shotgun and there's certainly plenty of turkeys around. And I'm also gonna get a handgun in the near term future. But again, things that I will never shoot, probably once a year just to make sure they still work. I'm not interested in guns in any way, but good to have on hand, worst case scenario. And a last and very important aspect is community. Can't do this alone if you're having to survive in a world that we have not ever experienced, and having your neighbors around and on the same team or friends that live in the area. And again, you have a couple beers with your friends and lay out a rough game plan, and it can't hurt. It's something that hopefully we'll never have to utilize, but if we do, having that footprint already laid out and knowing what steps to take as opposed to having irrational emotional reactions can make all the difference.